Hey friends, Lucian here with the Bullish Bears team. Wanted to make this video on the 3 outside up candlesticks pattern. Outside up is a candlestick pattern where the market is in a downtrend. The first candle is black or red. The second candle is white or green with a long real body and fully contains the first candle. And the third candle is a white or green with a higher close than the second candle, right? So, very important to note. If you've been taking our candlesticks course all along, this pattern should be very glaring. This 2 candlestick pattern is also known as a bullish engulfing, right? Bullish candle engulfing this bearish one. So this right off the bat is showing or giving a warning sign of a potential reversal, and this third candlestick confirms it. Now, just because you see this doesn't mean it's going to go up forever, right? You got to watch and see the other patterns that are involved, how far prices from the moving average lines, all that good stuff. But this is a 3 outside up pattern, right? Starts with a bullish engulfing pretty much, and then this third candle kind of confirms it, right? Confirms the reversal. So let's go take a look at several real world examples. Let's take a look at OII here. You can see the, price is kind of falling down right here. Sometimes it'll trade sideways. It's not always going to be perfect, but as you can see, a huge green candle that is enveloping this smaller real bodied red candle, bullish engulfing. Even though the wick came down outside of this candle, that's okay. It's still engulfing it. And then you can see third candle closed above the second candle. And then obviously it went up further from there, right? It started to get overbought, and then when it gets overbought, be careful. Price wants to naturally gravitate back. It's like a rubber band. Price is like a rubber band. When price gets overextended either way, either oversold or overbought, price naturally wants to gravitate back to these moving average lines. So the further it gets away, people want to take a profit up here, and the further away it gets down over here, people want to buy, right? So think of moving average lines as the equilibrium, and you'll see these 3 candlestick patterns are again showing reversals, right? Showing reversals as for the stock potentially turning around and going back more towards an equilibrium level. Now, again, there's no guarantee if or when the stock's going to do it. That's why you got to watch patterns. So incredibly important. Let's take a look at several other real world examples. You can see MCO over here, Moody's. It was kind of trading, it fell down here, traded a little bit sideways, and then you can see bigger green candle envelops this red one. Third candle closed above the second. Reversal. No coincidence. Look where it's happening at, right at the moving average lines. Price is kind of holding. It's kind of consolidating right around the moving average lines. Kind of holds right here, closes above the 9 EMA. You get a 9 and 20 crossover. Third candle closed above, and then lift off. There you go, right? No coincidence as why this happened. Many times the price will happen or this reversal will happen below moving average lines, further below. Sometimes it happens right at moving average lines. Be very aware of how close it is and where those moving average lines are. Let's take a look at Ford. Really nice looking 3 outside up. Price is falling down over here. You can see huge green candlestick here, totally enveloping this red hammer right here. Bullish engulfing. Really huge, just closing right above that 9 EMA. Third candlestick, boom, right above it. And then obviously, again, these moving average lines are resistance areas, so you got to watch what price is doing in relation to it. You can see basically 3 advancing shoulders, these 3 green candlesticks. Again, take our courses, and then boom, reversal back down. Again, what goes up must come down at some point. And but again, another version of a reversal pattern. Sometimes they're smaller candlesticks, sometimes they're bigger, right? Watch where the reversal's happening around other candlestick patterns and also moving average lines. Let's take a look at MYL. You can see kind of this doji spinning top candle here, right at the moving average lines. This bigger, not huge, but bigger green candlestick is engulfing this other one, and then it's closing right above the 9 moving average line. Boom, the moving average lines start to separate. This third candlestick closed above, and then there you go. And then it turns into obviously other patterns, right? There's patterns, and then there's patterns within patterns. When you zoom out, there's patterns all over the place, right? And then you got to zoom in closer, and then this would be a pattern in of itself, and this is showing, okay, indecision, right? When you zoom in on it, why is there indecision? Why is there reversal? It's showing a reversal. Well, no coincidence, right at the moving average lines. So incredibly important. Let's take a look at MNTA. This one was really falling. Look right down here. RSI was showing really oversold. Bigger green candle enveloping that smaller like doji or high wave candle, whatever you want to call that. Third candle confirmed it, right? And then lift off. It's trying to snap back to those moving average lines. Look at how far away price is from the moving average lines. Then when it gets up to the moving average lines, look, it gets choppy. No coincidence, because moving average lines are very important support and resistance areas, right? Let's take a look at a couple here for TRHC. A little bit choppier now, right? Not as perfect, but they're still pattern. You know, they're still happening, right? You can see kind of oversold. It was broaching it, right? You can see this smaller red candle was enveloped by this greener one. Again, it's getting whacked around by these moving average lines. No coincidence. Third candlestick closed above, and then it kind of went up and then came back down. Then you can see this green candlestick was enveloping kind of right around there, close to it, this other kind of high wave or a spinning top or doji candle, whatever you want to call it. Third one right here closed above the second. No coincidence, look, right at the moving average lines, right at the moving average lines. And then obviously gets kind of crazy on the way up there. Some of them are going to be cleaner patterns than the other, but you know, you just got to watch. I mean, again, patterns are not always going to be perfect. There's not always going to be a reversal. Sometimes it'll reverse and then crash. Many times it'll reverse and go up, right? Now you can see this one right here, Netflix. This doesn't have a red candle, right? It's kind of got like a doji or a spinning top candle falling right down here, right at the moving average lines. So this one is engulfing this other one. It's not a red candlestick, but then the third one went up. So again, telling you the same story, potential reversal. Don't bog yourself down in the minutia. Be like, well, that candle's green and not red. Who cares? Pay attention to support and resistance. You can see right here, there's a support level. This is all happening around the moving average lines. There's lots of indecision because price is trading in those moving average lines. Price needs to choose a direction, which it chose to get above the moving average lines. This crossover happens, and then there you go. Bull flag on the way up. Bull flag, bull flag, bull flag, right? Let's take a look at one or two more. Let's see, CBB. Zoom in over here. You can see a little bit choppier, right? Price is falling. Smaller, or this kind of this doji candle here. Inside of this green candle here, price is oversold. Second candle closes up, gets choppy right around the moving average lines, and then obviously decides to go up, but those moving average lines are resistance areas. Last one we'll take a look at, ZUMZ. Zoom in over here. And here we go. Again, a little bit bigger of a red candlestick. This green one is still enveloping it, but it's not as you know, small of a red candlestick. That's okay. Second one closed above, right? But look what happened. Confirmed a reversal, but then it failed. Where did it fail? Right at the moving average lines. So incredibly important. So this goes to show you this is oversold, moved back up, but it failed. Because patterns fail a lot. They don't always just continue to go up. That's why you got to watch and be aware of the moving average line.